Good afternoon, Campbell McCreary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with AbraSilver. Abra trades on the venture as ABRA and as ABRF on the OTC. We hope you'll enjoy today's program. It will also be available in replay on demand about an hour after we wrap up at amvestcapital.com/replays. We'll also be emailing it to you. New York Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource space. Please note this disclaimer. Very much this event is for informational purposes only. On your way, after watching this show, on your way out, please share your feedback or email it to us. It's always appreciated. We'll make it to management. We're pleased to have with us actually 3 people from the firm. John, first I'm going to make you presenter, and would you all share your webcams as well? So we have John Miniotis, President and CEO, Dave O'Connor, Chief Geo, and Carlos Finglo, all from La Plata. And you have the floor, and we'll all reconvene after you're done telling us about the company.
Excellent. No, it sounds great. Thanks, Campbell, and thank you very much, everyone, for your attention. We're very excited to walk you through the AbraSilver story. We feel we're definitely emerging here as one of the top tier silver gold exploration companies globally, and have lots of exciting catalysts ahead of us here in the near future. Of course, please note there's going to be some forward-looking statements as part of my presentation here. AbraSilver, from a high level, our key asset is called Diablillos. It's quite a large, high-grade project, silver gold, located in a very mining-friendly province in Argentina called Salta. We'll talk more about that in a moment. But the project itself has quite a large resource base already and is clearly growing. So at the moment, within the indicator category, we have 80 million ounces of silver, 730,000 ounces of gold. So you can see about 140 million ounces or so on a silver equivalent basis. Now, importantly, this resource is located close to surface within oxides. So we expect quite straightforward. This is going to be an open pitable project with quite straightforward metallurgy. So we'll be producing gold and silver doré here. So this is a very economic project with excellent margins. Back in 2018, there was a PEA study completed on this project at very conservative commodity price assumptions. So at $20 silver, $1,300 gold, this project has over 30% after-tax rate of return. And importantly, at today's commodity price assumptions, this project has over a 50% rate of return, over $730 million Canadian net present value. And again, that's based on the existing resource, which we've been busy rapidly growing here through the exploration program that Dave and his team at site have just done a phenomenal job with. So we've been drilling for about 1.5 years now since we took over as management of this company. We've had some tremendous success, I'd say, on the exploration side of things. So we've now completed our first phase of the drill program. That was 15,000 meters. And I think by all accounts, very, very successful program for us. You can see some of the high-grade intercepts that we've encountered. And of course, we have a number of slides here that talks about this in more detail. But we've been very fortunate. I've encountered some very high-grade silver intercepts close to surface. So 103 meters of over 500 grams per ton on a silver equivalent basis. Again, open pitable. Also on the gold side of things, 7 meters. I mean, there's been multiple intercepts with, incredible gold grades for an open pitable project. And as we've drilled deeper through the oxides into the sulfides, which have had very little drilling historically, and even up till now, we haven't really focused on the sulfides. But as we've drilled through the oxides deeper into the sulfide mineralization, you can see some of the drill intercepts we've encountered here. So extremely high-grade copper and gold, values within the sulfides. So this represents a target that we'll follow up on, of course, at a later date. But for the time being, the focus is on continuing to expand the oxide portion of the resource and coming out with an updated resource statement on that next quarter. Fortunately, the company is also very well funded. We have $20 million of cash Canadian in the bank as of today. So we're fully funded all the way to a construction decision, which we expect to achieve in the first quarter of 2023. So we're working quickly here. This is a project that's highly economic, and we're moving to bring this to a construction decision by that time. Just looking at the share structure, you can see here the shares outstanding at current prices. We have less than a $300 million market cap. As I mentioned, $20 million of cash, no debt. So enterprise value of about $275 million. Importantly, this is something that's been transformational for us as well over the last year. The volumes have tremendously increased here. So we're quite active, very, very active. We're quite frequently one of the most highly, active names on the venture exchange. So on average, we trade over 2.5 million shares per day, just in Canada alone. And that's really opened up our investor base to institutional investors. So you can see here, we have quite a strong, supportive investor base. Eric Sprott led our last two financings last year, became our single largest shareholder with 15% of the company. SSR used to own this project, spun it off to us back in 2016. They kept their shares here, so just under 10%. And institutional investors have gone from essentially zero a year ago, where this was entirely a retail-focused stock, to now I believe it's probably over 25%. Conservatively, over 20% of our shares are now held by institutions. We've been doing, a significant marketing campaign here, and for the most part, I think institutional investors are really hearing the story for the first time, and there seems to be significant traction from that. So we expect that can continue to lead to good share returns going forward. You can see in terms of our share price, we've had a great run already. We're up since we took over as management, close to 1,000% here. So clearly outperforming a number of peers, but we honestly think the best is still yet to come. Q3, in my opinion, is likely going to be the most exciting time period for the company, where we're finally going to announce the updated resource statement, the updated PA study. We continue to be drilling here. And so we feel we're still in the very early innings of a major re-rating process here. In terms of the team, it's an extremely lean team. You have almost the entire management team on the call here today. So there's 4 of us in total. So myself and Carlos, who's our CFO, we're based out of Toronto. That's the head office. Dave, of course, is the chief geologist. He's in charge of our technical program. He lives down in Salta, where the project's based. So, very accessible. He drives up to site whenever needed. And we also have an excellent country manager, Eugenio, who's based out of Buenos Aires. And that's really the team. So we're keeping this very lean, very focused, low G&A costs for a company of our size for sure. And so spending the money on the ground in terms of exploration, where it's clearly adding the most value for us. Also very fortunate to have a strong board members. So we have a number of board members here with investment banking, corporate development experience, as well as legal. Hernan Zabaya is one of the top mining lawyers in all of Argentina. And then on the technical side as well, Nick Teasdale from Wheat and Precious has recently joined our board, and he brings a wealth of expertise as well. So all around, very fortunate to have a great team around me. In terms of the project, this is located in Argentina. Now, it's important to note, in Argentina, the provinces hold the mineral rights. So you deal with the provinces when you're permitting. The provinces have their own set of mining legislations, etc. So each province is, there's a wide range, I'd say. So you have on one end of the spectrum, Salta, which is an extremely mining-friendly province here. You can see that just by the amount of capital it's been attracting recently. So just last year, one of our neighbors, Fortuna Silver, completed construction of Lindero. That cost $320 million. They brought that up, and that's ramping up nicely. Several years ago now, First Quantum acquired Taka Taka, which is in Salta, of course. That's almost $500 million just to acquire that. That's a multi-billion-dollar project to build. And imagine at these copper prices, that's going to be a very economic project. And importantly, Salta is known for lithium operations. So we're actually surrounded by a number of lithium operations. One of our closest neighbors is POSCO. They're spending $450 million bringing up their project into operation. So clearly this is a region that's attracting significant capital. Of course, we're there on the exploration side and a number of others as well. And I think that's reflected in the latest Fraser Institute as well. So as part of the Fraser Institute survey, the annual survey that comes out every year, they break down Argentina by province and rank the provinces relative to other countries across Latin America. And Salta ranked #1 overall in all of Latin America. So ahead of Chile, ahead of Peru, well ahead of Mexico. So Salta, there's a number of benefits of being in Argentina. One of those is that once we have a feasibility study completed for any project, you then sign a stability agreement with the government, which locks in your tax rates, locks in your royalty rates for a period of 30 years. So once we have a feasibility study completed, we'll be negotiating that and then locking in the tax rate, which gives, of course, investors a lot of confidence, a lot of certainty to proceed. There's a number of other benefits as well, which we can cover in the Q&A if needed. Just in terms of time constraints here, I won't get into too much detail. Again, in the Q&A, we're happy to discuss the silver market if anyone likes, but we feel strongly we're in the very early innings of a major bull market here. But importantly, this is a project that even at $20 silver, even actually at $16 silver, this has very high rates of return. So I mentioned $20 silver, 30% after-tax rate, but exceptional leverage. As silver prices move up, we have a chart that shows you sort of the quantum on the leverage side. Now, focusing on the project in a bit more detail here, as I mentioned, we have 140 million ounces silver equivalent. That's the current economic breakdowns, about 60% silver, 40% gold. And when you look at this actually from a gold equivalent basis, because there's a number of there's a much higher number of gold peers with open pitable oxide projects. You look at this as a gold project, we'd have 2.1 grams on gold equivalent basis, which benchmarks very favorably to most other projects out there globally, more than double the existing benchmark. And importantly, we feel very highly confident that this, both the grades on the silver and gold side, are going to increase when we come up with our updated resource next quarter here. And this gives you sort of some feel as to why we're so confident in that. So this chart here shows the top silver intercepts globally for all of this year and all of 2020. Now you can see we have 4 of the top 32 drill intercepts. But importantly, I mean, this is only showing things on a silver basis, so this is not silver equivalent. So we're looking at the grade meter thicknesses here. So on a silver basis alone, we have the #3 drill hole globally. So this was 103 meters, over 300 grams of silver, very high grade. But again, we had close to 2 grams of gold in this intercept. And so if you look at this from and of course, for all the peers as well, they have byproducts, but frequently it's zinc and lead, certainly not as valuable as having 2 grams gold over those types of width. So on a silver equivalent basis, if we were to rerun this chart, we feel confident this would have been the #1 drill hole globally. These other holes move up significantly as well. In fact, this one here was 104 meters, over 200 grams silver, but over 2 grams of gold. I think it was 2.2 grams of gold. So the gold in this hole is actually more valuable than the silver. So clearly, I mean, we have a number of the top, silver equivalent intercepts globally. And what's even more important, I think, to note is that Diablillos stands out from this list as one of the very few open pitable projects. So of course, most primary silver mines are underground, quite a bit deeper, a lot more expensive, of course, to mine. And so typically, underground projects have much higher grades than open pitable projects. But here we're comparing our open pitable grades to underground grades. And clearly, I think, this is stacking up very, very favorably. So we're adding high margin ounces through our exploration program, and I'll let Dave walk you through some of those results shortly here. Just from a high level, looking at the PA study, again, we're going to be updating this next quarter, but for the time being, you can kind of get a good sense of the quantum of this project here. 6,000 ton per day plant. So this is a CIL plant, carbon in leach. We'll be producing gold and silver doré, as I mentioned. Very good recoveries, 82% silver, 86% gold, and we actually see significant upside potential in those figures to improve further. We'll talk about the economics shortly, and again, we'll be updating updating this study next quarter. Just from a valuation perspective, this is a very important slide. So you look at the PA study in more detail. We talked about the conservative commodity price assumptions used in that study. Still results in a 30% rate of return, $337 million value for this project. So if you divide that by our current shares outstanding, that's about 77 cents per share. So we're currently trading at under 65 cents. So the share price has clearly come a long way from where we were. We were essentially trading as a shell company a year and a half ago, trading at 5 cents, nowhere near reflecting the value of this project. We've clearly re-rated through the exploration results that we've been announcing. But where we sit today, I mean, we're still not reflecting the value shown in the PA study using the existing resource, using very conservative commodity price assumptions. This value, the project here has a value of 77 cents per share. So we're still buying today at a discount to that price. Now, importantly, when you fast forward to current commodity prices, keep the resource the same until we update that next quarter, you can see 54% rate of return. This project is valued at $730 million Canadian, $1.66 per share. So we're trading at a $1 off, dollar off discount here for AbraSilver shares. We're trading at less than 65 cents per share today. So trading at 40 cents on the dollar, based again on the existing resource. Now, when you look at the current resource, this is what we have at the moment. So you can see here, most of the resources already within the indicated category. There was over 40 million US spent on exploration historically to help define this resource, in addition, of course, to what we've spent here. But from a gold equivalent basis, you can see 2 grams, 2.1 grams gold, or 156 grams silver. Very good margins, very good grades for an open pitable project. But you can kind of get a sense of the grades we've been intersecting. I mean, frequently coming out with, we've been coming out with press releases every 2 weeks or so. And the norm is now that we're coming out with these types of intercepts, which we're extremely pleased to consistently be encountering. So you can kind of get the sense here. I mean, clearly coming out with well over 2 grams of gold, importantly, over significant intervals. I mean, we're not just showing 1 meter of 3 grams. I mean, we're talking about 103 meters, 104 meters. You can get a sense here. And if you click on this link, I mean, of course, this presentation's on our website, and on the front page of our website, we show every single hole that we've announced to date, and that kind of gives you a better picture. I mean, this is just a small subset. We could have 5 slides like this, which shows that. That's summarized on our website. Over 85% of the holes we've drilled have had, grades well above the existing resource over significant intervals. So we feel quite confident saying the existing resource was, frankly, quite understated in my opinion. And so we'll be coming out with the updated resource here shortly, as I mentioned, in Q3. And then with putting out economics around that as well, which we think is going to be a significant milestone for the company. Maybe I'll turn it over to Dave here. I mean, he can walk you through sort of the exploration program. Essentially, we've completed now the phase 1 drill program. That was 15,000 meters. We're waiting on an additional 5 holes from the lab. Those holes are in the lab as we speak, and we should receive those results within the next few weeks. And once we get the results there, all this information is going to be incorporated into the new resource. but essentially there were 3 targets. So there was a deeper gold zone sort of sitting at the base of the proposed pit shell. We had several very high grade gold intercepts in that area. We also defined a shallow gold zone here in a material that was previously classified as waste under the existing PA study, and then have had some very good success drilling out towards the northeast outside of the proposed pit shell, and we look to expand the pit out in that direction. I guess, Dave, did you have anything to add there? Oh, I think you might be on mute, Dave. I can't hear you.
I'm not on mute, I don't think.
Okay, now I can hear you. Yeah, I couldn't hear you before. So.
No, as John mentioned, we've done 15,000 meters of drilling, and that's going to be incorporated in the new resource estimate. The objective of the drilling was to expand oxide gold resources, and we started off pushing the oxide gold zone down below the Whittle pit margin, as you can see, zone number 1 there. As John mentioned, we've been drilling zone number 2, and we've been drilling on a grid basis, 25-meter line spacing, and doing quite a number of holes to outline a resource that will make a considerable difference to the early stages of the open pit, because it was previously classified as waste, and that's going to be one of the focuses of our resource updated resource estimate. And then we've been drilling in the area towards the northeast, which is zone number 3, and some of our holes out there indicate that we will be able to move the boundary of the pit further across to the northeast. Now, all that's going to be part of the updated resource estimate. And we've remodeled the geology, we've remodeled the alteration zones and the mineralized zones, and incorporating bulk densities, etc., into that. This is a section through what's now called the Tesoro zone, which is at the intercept of the cross breccia. The mineralization is in a series of steeply dipping breccia zones. These intersect here at the Tesoro zone, and we get an enhanced thickness and grade of mineralization, both gold and silver, because of the more favorable structural geology of the zone. Now you can see, just as an addition to that high-grade zone, which will actually be the focus of the updated resource estimate, you can see that there's a shallow gold intercept right at the top of the screen there. That's part of the shallow gold resource that we have drilled and will be defining. And as I say, that's going to make a big difference to the early stages of the economics of the open pit. Then the intercept out to the left-hand side there is actually beyond the pit margin. It's north and east of the pit margin, and that's where we're drilling now. So we've moved the rigs off of the Oculto zone, and we will not be including these holes in the current resource estimate because we had to stop somewhere, but we're carrying on drilling, and we will be expanding the mineralized zones beyond the pit margin towards the northeast, as is shown by that example of the drill hole there.
Great. Sure.
Yeah.
And now this one here, just a quick high-level summary. So the existing resource, all of it, is within the Oculto zone. That's where we've been focused on drilling. That phase 1 drill program that we've mentioned is completed. 15,000 meters was mostly focused on Oculto, and so this is where we'll be updating the resource here, updating the economic study. And until that's completed, we'll be drilling these other sections right now. So at the moment, we have continue to have 2 rigs at site. One's drilling the northeast zone, one's drilling Laderas, and then we'll be drilling up in this northern arc zone as well. And so there's potential to expand and find satellite deposits here, but Oculto itself is clearly highly economic, and that's what we're looking to advance and bring to a construction decision by Q1 2023. In terms of infrastructure, Dave, you want to just give a very quick overview before we turn over to questions?
Our project, our gold silver Diablillos project, is surrounded by lithium projects, some of which are in operation and some of which are being developed. Our closest neighbor is POSCO, where they intend to spend $450 million to develop their lithium operation. That's about just under 30 kilometers away. So the highway, the gravel highways that cross the area are very convenient for us, and we are 18 kilometers south of the main gravel highway, which goes from east to west across this part of the countryside. There's also we're about to have the final report of a power study to show to compare the various economics of using a gas pipeline or trucked high pressure gas or diesel and or solar panels. So that's underway. We're also completing detailed metallurgical test work and mineralogical studies, which will be incorporated in the updated preliminary economic evaluation. And I have to say that the metallurgy is so far looking pretty good. We did 8 independent samples of our own before we decided to merge, to make sure that the metallurgical results were not overestimated in the previous resource estimate. And in actual fact, we think they're now quite conservative. Where we are in this part of the world, there's no alternative land use. The closest community is about 100 kilometers away, and that's only a few hundred people. It's called Pastos Grandes, and we actually employ people from there as technical assistants on the project. So from an environmental and community standpoint, we think this is pretty ideal.
Great. So yeah, no, in terms of milestones, as I mentioned, we've had a busy year already, and it's about to get even busier for us here. So we've completed the phase 1 drill program. We're now, going to be working on the updated resource, updated PA study, which we announce next quarter. Of course, we're drilling now the phase 2 drill program, which is those 3 other satellite deposits for the time being. And then we believe we'll likely advance this before year end, start working on a feasibility study. So this is clearly an economic project here. We don't want to waste the next 3 years studying this. It's clearly economic. Let's go to the feasibility study, get permits in place, and have a construction-ready project for this current cycle. Now, really, that's a focus of the company, is Diablillos. But just from a high level, I should mention we also have a few other early-stage exploration projects, which could become quite exciting and which will commence drilling here shortly. So in Chile, we have an early-stage project called Arcus. We own 100% of this. It's 50,000 hectares in the Antofagasta belt, located close to ABRA and a number of other majors. We partnered this with Rio Tinto. Rio can earn up to 75% interest in this project by spending $25 million. We expect them to commence exploration here shortly. And so we're keen, of course, for them to do that. They'll be funding that exploration program on their own. And then in the Argentinian side of the border, picked up a very exciting early stage and copper gold project called La Cueva Pita. So again, this one's a 50,000 hectare land package, formerly owned by Teck, in elephant country once again. So we're close to Los Azules, which is a 1 billion ton porphyry, close to Alhambra and other porphyry. You can see some previous very exciting drill results from this project. And we actually expect to be drilling this ourselves come October. Once the field season opens up, we'll be drilling this. And I think both these projects could likely be seen as a spin-off. So spin these out to shareholders, assuming there's economic discoveries made here. It could have more of a copper-focused early stage company here emerge. So that's another potential upside. Of course, first step first is we have to be drilling these projects, see what the results look like, and then we can figure out how to maximize value and reward shareholders for having a stake here. Just given the time constraints, maybe we'll leave it there and then open it up to questions. Definitely encourage anyone with any questions. Please feel free.
Excellent. Well, thank you all for sending in some of these great questions. Please comment on the dimensions that you have seen in the new Tesoro zone.
Yep.
Right.
If you can go ahead, I think we put that in this chart here. Dave,
yeah, I think a map is probably better, but this is a section through the center of the Tesoro zone. Now, the Tesoro zone is an arbitrary zone. drawn around the intersection of, as I mentioned, the main and the cross breccias, which are subparallel and intersect at this particular point. But the mineralization, so you can see the dimensions that have been put on that of 200 meters long into and out of the screen. In other words, about 100 meters into and 100 meters out of the screen, 150 meters vertically, and we're saying 50 meters thick, but in actual fact, it's probably thicker, but it's an arbitrary classification of the Tesoro zone. And in particular, as I mentioned, this is the intersection of two breccias, and the mineralization goes beyond the intersection, both into the screen and out of the screen. So we're not calling that the Tesoro zone, but the mineralization continues. And the length of the mineralization in the known breccias is between 700 and 800 meters long, and actually continues several hundred meters beyond that towards the northeast into that northeast zone where we're now drilling. And that's indicated to some extent by that intersection on the left-hand side of the screen there, that gold intercept. So let me put it this way. We are going to come up with a resource estimate after we've finished the next 5 holes. That resource estimate, that's an arbitrary line that we're saying, okay, we have to do the resource estimate now, because the more we keep drilling, the more we keep expanding it. And I'm not showing off here, that's just the way it is. So we will never do a resource estimate if we carry on drilling. So we'll do the resource estimate based up to the hole 20 and 2120, which is 5 holes from now. And then the rigs have already moved off this, and we will just carry on drilling. And we anticipate expanding the resource to the into the northeast zone, where the rigs are now, one of the rigs is now drilling. And we're then going to have to come up with yet another resource estimate, but that will be later on this year. You know, the resource estimate that we're doing now will be the basis of the preliminary economic evaluation that we're going to start very, very soon. To be honest, we've got a company called Mining Plus, who are consultants who are doing the resource estimate for us, or working with us to do the resource estimate, and it's probably them that are going to be doing the preliminary economic evaluation as well.
Yeah. And I don't think we mentioned the drill budget. So I mentioned we're fully funded. So the entire phase 1 drill program cost us $4 million US. So I think we've added many multiples of that in terms of a return on an investment here. And so, you know, of course, we're now drilling a minimum of 10,000 meters. We can likely expand that if that's also, you know, bearing fruit for us. But this phase 2 drill program, we're budgeted $3 million US for it. And so this is, you know, we're not just going there and, you know, drilling with 6 rigs and drilling hundreds of holes here. I mean, we're sort of plotting out each individual hole. You know, a hole costs about $150,000 on every hole, basically to be very economic and a great return on our investment. And so, you know, we're taking, you know, a very strategic approach here. But yeah, there continues to be several exploration targets all around us. And so there'll continue to be updated resources as we move forward here.
And we have a few questions to go through, so maybe brevity is the spirit here. Okay, in the old resource, there was a big pre-strip. Some of this year's drilling has been in this area. What kind of volume, tonnage, and rough grade of previously classified waste have you outlined?
Yeah. So that's a great question. So that's an important distinction that we can optimize here in terms of the new PA study. So the capex of the project here is about $300 million under the 2018 PA study. Close to 100 million of that was on pre-stripping. So you're moving 30 million tons of waste. That took up 18 months of the schedule. So that was a very large component here. But you can see some of the drill intercept. And there's been a number of historical high-grade intercepts close to surface. You can see those here. And then, you know, unfortunately for the previous owners, they didn't include that as part of the mineral resource. Just the search ellipses didn't include this mineralization here. So they're too wide spaced, but not even included as inferred resources. And so we took a systematic approach, drilled this at 25-meter centers, multiple holes per line here, and have come across very high grades. I mean, not only above cutoff, but above resource grade, close to surface, gold in oxides, pretty straightforward. So we see this emerging as almost a starter pit for us. Within the first 12 months, we'll likely be moving this material that was previously classified as waste, but this could go to the mill, of course, and provide economic returns. So we're not, we're not going to give guidance here in terms of tons and grades of the updated resource. Of course, that work is yet to be done. But in terms of, general rule of thumb, we see a lot more upside in terms of the gold resources. So we see tonnage increasing, grades increasing of both silver and gold. But the targets, really the exploration targets, have been more gold focused. So that deeper gold zone, that shallow gold zone, and towards northeast is also more gold rich. So we see significant increase here in the gold resource, and likely this could become a project that's about 50-50 silver and gold, almost an ideal breakdown between precious metals here. And so, yeah, no, I'd say, well, we'll have to wait and see what the final figures hold, but we expect a pretty significant increase for sure.
As you scope the new PEA versus the old PEA, do you have any comments on plant throughput rate? Will it change?
We'll be doing optimization studies.
Capital cost inflation from the PEA.
Yeah. In terms of the throughput, I mean, we'll review that. There'll be optimization studies. Initially, this had an 8-year mine life. We'd like to expand that, so we could likely keep this at 6,000 tons per day. Of course, we'll evaluate other alternatives as well. So it'd be nice to, with increased tons, expand that, and with increased grades, increase the production profile per year. We mentioned in terms of the capital cost, a major item that's going to decrease is the pre-strip. So that strip that was going to previously be, capitalized is now going to become revenue, a lot of it. So that will help reduce the operating costs or the capital costs. And of course, we're going to benchmark. I mean, we have a great benchmark in Lindero that was just essentially built last year. So we'll review their mining costs, their capital costs, and come out with any updates needed.
Okay, thank you. Adam? Adam, we can't hear you.
Can't hear anything.
Artie, we'll go to you and then come back.
Right, thank you. What is the depth of the current open pit, modeled open pit? And I'm wondering, what is the high grades that you guys are getting below the...
In the deeper gold zone, what are the high grades?
Yes.
Yeah, we have a cross section here that we can show you that as well. Yeah, the depth, I guess, Dave, is about 250 meters.
The depth is about 250 meters, but with our new drilling, we're considering taking that down another 50 meters or so. So it'll be 300 meters at its deepest point, as opposed to 250, basically.
And this is just one cross section. I mean, I think if you actually, so you can see some of the grades we've been intersecting here in this deeper gold zone. It doesn't really do it justice. I mean, that's only a very few. I guess if you look at this, you can kind of get a sense sort of down. This is sort of the intersection here that we were targeting, down about 250 meters. You can see that was one of the best drill holes we got in that section there. But you can see very high grades that we're encountering down at those depths consistently. And like I said, I definitely encourage everyone. Even this doesn't do it justice. I mean, even 2 days ago, I mean, I think I have that up here. Hold on, if I can share that screen. I don't know if I can get out of this. Can people see this here?
Mm-hmm.
Yeah.
This is the press release. So this is our press release from 2 days ago, as an example. We announced another 3 holes. You can kind of get a sense of what we're intersecting sort of down deeper. So this hole 14.
John, I might just mention on that, there was a question asked about the size of the Tesoro zone, and I might just mention that holes 14 and 15 are 200 meters apart, one on either end of the Tesoro zone, and we're getting substantial intercepts, so we know that the Tesoro zone extends beyond what we're calling the Tesoro zone, basically.
Exactly. And this hole here is important because it actually extends quite a bit below and still in oxides. And you can see the gold grades here. And so, yeah, no, we're piecing all these results together. But there's been a number of intercepts here with very exciting grades, and so yeah, we expect the grade profile for sure will improve at depth, and likely, as Dave mentioned, we can deepen the pit eventually, which will lead to longer mine life.
You partially answered my second question, but like when we look at the current data amount you have, how well you could be able to model the transition zone that your ore changes from oxides?
Dave, I'll let you talk to that one. I'll bring up the this one here again.
Yeah, the mineralization is what we've been doing is drilling for oxide mineralization that we can cyanide leach. But we've been drilling since we were in mineralization at the base of the oxide zone. We've kept that going down into sulfides. Now, sometimes there's what you might call a mixed zone. It goes from the oxide zone through a sulfide zone, back into the oxide zone, and then back into the sulfide zone. So we're calling that a transition zone, but I think it should be called a mixed zone. So we are going to have to segregate out in detail the oxides and the sulfides to see what part of that can be cyanide leached. And that's a process that that we're going to be going through in our resource estimate that we're now doing.
And yeah, it's probably worth mentioning, I mean, the sulfide intercepts that we've intersected, as we mentioned, we've been drilling for oxides, but as Dave just said, I mean, we've been, extending some of the holes deep into the sulfides. I've been getting, this hole here is the 15 meters, 5% copper on one side. Over here, we have, I guess, 55 meters, well over 1% copper. But we haven't even followed up these holes yet. So clearly some high grade copper here, also some excellent gold intercepts in sulfides. But for the time being, we don't want to lose focus of the low-hanging fruit, which is the oxide resource here, highly economic. Let's put out the updated PA study on the oxides, continue to move that forward. And then, of course, we're going to want to know, follow up. These types of copper intercepts are pretty spectacular. So we'll do some deeper drilling as well, either as part of phase 2 or phase 3. And so, yeah, we'll be doing some deeper drilling, likely look to define a sulfide resource. But that's, of course, almost a different project. You'll need a flotation plant, et cetera, for that. So right now, we're just looking to maximize, and speed up the oxide project, get that permitted into production as quickly as possible. But yeah, at the same time, of course, we're going to want to understand what's beneath this.
Understood. Thank you. Let me pass to Adam. Pass this to Adam.
Okay, that's not working. So we'll move back to questions. Have any met work been done on the oxide portion of the project?
Yeah, well, ton.
A great deal of metallurgical work was done. There's about 65 samples that were submitted for metallurgy before we got involved, and those were the samples, those were the results that were used in the 2018 PEA, and the recoveries there were 83% for silver and 82% for silver and 86% for gold. Before we got involved, we did 8 metallurgical tests of our own, and our results came back with higher recoveries than we used in the PEA. So that gave us the encouragement to merge the two companies. And subsequently, only a couple of weeks ago, we've sent off 71 samples to Canada for to ALS for metallurgical tests, a very comprehensive metallurgical test work, and a subset of those to SGS for mineralogical studies. So we're proceeding with a lot of detailed mineralogical and metallurgical studies, because the resource is divided into different zones, and each zone warrants having a separate set of metallurgical tests to improve the recovery. So I think we're confident, and our metallurgist consultant that we've contracted, Jerry Perkins, is confident that we'll increase the recoveries of silver and gold. And harking back to an earlier question about the size of the project, the throughput rate, 6,000 ton per day is not going to change much, we think. But what will change are two things. A, the head grade is going to go up on both silver and gold, because we're being more specific with regard to our resource estimate, and B, the recoveries will go up. So the tons are going to change much in terms of throughput, but certainly the recoveries and the grades will go up. And we will be tagging on a couple of years at the end of the project for extra resources out towards the northeast. But more importantly, the first year we will be putting through the shallow gold zone, and you know, if we have 50,000 ounces of gold, that pays for the $100 million worth of pre-strip that was considered before. So that totally changes the economics of the first 2 years, really, of the pit.
Moving on to capital structure, seems like 20+% of cap structure is warrants and options. Can you tell us a little bit about some of that background?
Correct. Yeah, no, so yeah, some legacy issues here for sure. When
to use the words exactly, how did you let that happen? So
sure. Yeah. So when we got involved with the company, so we were all previously running a company called Aethon Minerals. And of course, you know, back then this company was called ABRA. ABRA acquired Aethon in an all-share deal, so issued a large number of shares for that acquisition. That's how the team came together here. And of course, last year, I mean, we decided when the silver price was hot last summer, there was clearly demand as we were marketing. So we took the decision saying, look, we're going to fully fund this company right now, all the way to a construction decision. So let's get the financings behind us. The previous management team had completely run out of cash. You know, that's why, you know, there's clearly exploration potential here that they weren't able to unlock. So we wanted to avoid that from happening again. We took the decision, let's raise the cash that we need now, not have to worry about financing, and just carry on here. And so we raised $25 million. You know, to get Eric Sprawn involved, unfortunately, you need to be issuing them warrants. So we issued a number of warrants last year as well as part of the merger. Aethon also has warrants, but the warrants have been funding us. So as of year end, December 31st, we had $17 million of cash in the bank. Today, where we sit 6 months later, we have over 20, despite, of course, doing a bunch of drilling and a lot of work on this project. So the warrants continue to fund the company, more than offsetting all the activities we're undertaking. And that's why we feel confident. Look, the capital structure is what it is. There's nothing we can do and go back and change that. But going forward, we don't need to issue a single share here to get this project to a construction ready status by Q1 2023. So that's, you know, that's where we're at. Now, at some stage, maybe we can roll back the shares. I mean, you know, there's pros and cons of doing that. We've considered that in the past and decided to wait. So yeah, maybe at some stage we'll roll back the shares to clean up the share structure a bit. But for the time being, I'd say that's not a priority for us.
did you say you have the ability to force convert the warrants?
There's accelerators in a number of these warrants. We can call those. We haven't chosen to call them, and we see no need. And so a number of those can be called if we need the cash, but right now we have more than enough cash. So unless there's some acquisition opportunity or some, you know, something else that comes up, I don't see a need for us to do that at this stage.
I'm gonna give it a shot one more time, Adam. You have audio.
Hey guys. Yeah, I called in. Quick question. So you guys are this asset. I'm remembering this asset now from when I was covering Silver Standard and SSR, and my recollection is it's all, the plan is all heap leach. Is that correct?
Agitated leaching. So there'll be a plant here, 6,000 ton per day plant. So we'll be producing silver and gold doré. So it'll be agitated leaching, not heap leaching. Yeah. But yeah, the entire resource is within oxides. There's no sulfide component as of now.
Oh, I understand that. So are you guys going to have to build, forgive me, a SART plant or something like that to deal with the copper?
The copper's within the sulfides. Yeah, go ahead, Dave.
No, I was going to say, I mean, we're not going to be mining copper. The drilling that we've done so far, the 15,000 meters, has been focused on expanding the oxide cyanide leachable resource. So we're going to be mining gold and silver in a carbon and leach circuit. Eventually, we would like to consider doing deeper mining and mining the sulfide zone, and that would be a copper concentrate with the associated gold. But that's for later on.
No, I understand that that you believe you're sitting on top of a porphyry here. I assume this is some sort of a high sulfidation system, and it looked from a cross section that you guys showed, that while the majority of the copper is coming in under the pit, that some of the copper looked like, or at least maybe in low grades or small amounts, is coming in within the pit. That sounds to me like you're going to need to deal with it.
Well, it shouldn't be coming in the pit. I mean, that there's a transition.
That's the way this looks here. If green is copper, yeah, and I see a pit outline.
Yeah, sure. We're going to be mining. I mean, that's a long section, right? So it's that outline of the pit is that outline at that particular slice. So we're not going to be mining sulfides. We're going to be doing our resource estimate on oxides, and talking to Mining Plus, who are our consultant engineering firm on this. We will come up with a geological resource, a geological potential on the underlying sulfides, but no more than that. So the indicated and inferred resource is going to be oxides, and that's going to be stuff that we would put through a cyanide carbon leach circuit.
Yeah, just so I understand that I'm clear here, David, you are saying that there is no significant copper that is going to be preg robbing at all within the oxide.
Absolutely.
Okay.
We know that from the detail of the drill holes that we've got. Mind you, I have to say, we started off trying to drill for a high grade oxide gold resource, but since it looked so well mineralized, we poked a few of the holes a couple 100 meters deeper and got these copper intercepts with associated gold.
And so David or John, maybe you can just clarify or reiterate the prior management. What this asset, as it was sitting under Silver Standard or SSR, they held off developing this asset primarily because, one, it was in Argentina at the time, or two, because of the pre-strip, or a combination of those factors.
Do you want me to answer that, John?
Sure, yeah, I can add in as well. But yeah, go ahead.
I just want to make a quick comment that at the time, Silver Standard had Pirquitas. They still have Pirquitas in Jujuy province, and they wanted to expand the life of Pirquitas to avoid the closure costs of Pirquitas. So they developed nearby Chinchilla, which is 40 kilometers away, and they put their investment into developing Chinchilla. And I've seen correspondence that they've got saying, well, we would like to develop the Diablillos, but first we need to focus on developing Chinchillas to expand the life of the Pirquitas operation.
Yeah, and I'd add to that saying, look, of course, we can't speak on behalf of SSR. I mean, you can ask them or their previous management team if you want a direct answer from them. But the way I see it, I mean, this asset was spun off back in 2016. PEA study was done 2 years later in 2018. So this was quite an early stage project at that stage. It seems to me their focus was more on operations. Look at the M&A opportunities that they've announced since then. It's been clear that they've been looking to ramp up operations. These earlier stage assets, Diablillos being one, there are at least 3 others I can name, one in Peru, one in Nevada, one in BC. They also spun off at that time. All were earlier stage, held on to equity interest. They continue to hold on to equity interest in a few of our peers here from assets that they've spun off. And so that was a strategy they undertook at that stage, is look, these earlier stage projects that they felt weren't really getting much value for, let's spin them off. They've kept a 1% NSR royalty. They've kept the shares, which of course are up over 1,000% in our case here. So they're doing quite well. But they're very, very pleased, of course, with the progress that we've been taking. I speak to SSR on a regular basis still. And so, yeah, this wasn't core for them. But of course, for a company of our size, and even much larger companies. This is definitely a very unique asset. And so, we're happy it's in our hands right now.
Adam, I might just add that
Go ahead, David.
Somebody talked about the shallow gold. No, you mentioned whether or not the pre-strip, the substantial pre-strip put Silver Standard off. I'll tell you that the substantial pre-strip put Fortuna Silver off because they've been looking at this project for some time, and they visited several times, and a couple of times I've taken them up there. Now they're particularly interested in what we're doing with the shallow gold, so they always comment to me after we've had another shallow intercept, and they're happy to see. Well, they're happy to see that we are getting shallow intercepts of gold mineralization, which is changing the early economics of the pit.
John, I just comment, that the Perquitas asset that Silver Standard chose to execute ahead of Diablillos, clearly a challenging asset in many ways. I think you probably agree, and so it's I'm just thinking back to when they chose to execute Perquitas over Diablillos, and and if they knew at that time, that they were overestimating the pre-strip, would that have been still their choice?
I think it might have been. I'll tell you why. Because we know geologists that have worked at Perquitas, and in fact, Eugenio worked substantially in the zone, but not just at Perquitas. And the closure costs and the social costs of Perquitas are substantial. And they were trying to postpone that by developing Chinchilla, which gave them an extra 5 years of life, basically.
No, I understand that, David. I'm talking about back at the initial decision to develop Perquitas over Diablillos.
Yeah.
Oh,
yeah, we
can't
can't really comment for SSR what they were thinking. I mean, one asset's obviously in operation. This is still even today a few years before being in production. And so, yeah, I mean, it's clear. You look at their portfolio; they're more geared towards operating assets. I don't want to be comparing the quality. I mean, we have an outstanding project here. SSR is still a supportive shareholder. They're still owning 9% of this company. We have a very good relationship with them. Whether they regret their decision or not, I don't know. You can go ask them. But yeah, we're happy where we're at, and yeah, we're moving this forward.
Glencore own the Aguilar project in Jujuy, and they've got long-term problems of closure of that. It's closed already, but their problems haven't.
Very good, guys. And again, you guys are coming out with an updated PEA, or are you moving this right to PFS? I apologize.
Updated PEA study in Q3. So certain aspects of it will be at the PFS level. Dave mentioned the metallurgical test work. That's going to be very detailed, well beyond any PEA level studies we feel. So some aspects are going to be at the PFS stage already. So we'll be coming out with an updated PEA. That'll be the quick way to get the updated economics out there, but then moving straight to a feasibility study. So there's likely no need for us to complete a pre-feas here. And so, we expect to have the pre-feas study completed by end of 2022 or early 2023, as well as all permits in place. So we've already fast-tracked the permitting process as well. We've started the environmental baseline study work back in Q1 of this year. We expect to have that wrapped up by Q1 2022, and then it's a defined process. So we should have permits in place by end of 2022 as well. So by early 2023, a year and a half from now, this is a construction-ready project, feasibility study completed, permits in place, and we're fully funded to do that.
Excellent. Thank you, guys.
Thank you.
All right. Want to thank everyone for tuning in and for spending this time with us. On your way out, please share your feedback. You'll be cued for it. It's obvious. Please share a few lines, or if you want to write more, please send a big email, and it'll all get to John and Dave immediately. that, I'll turn it back to John and Dave to close us. So,
Sure.
maybe
Okay.
sort of follow what we should be expecting
Sure.
in the next many months. Thank you.
Sure. Thanks, Campbell, and thank you everyone for all your attention. Yeah, as hopefully you can tell, I mean, we're extremely excited about what's yet to come here. This is the last 6 months of this year are going to be, have some very significant milestones. We feel, as all the drill results finally get put out into an updated resource, updated economics are announced, and we continue to drill going forward. So we're, working as hard as possible here. Advancing this project forward and continue to unlock value for shareholders. And that's what we're doing.
Excellent. Thank you. And till we meet again. Bye now.
Thank you, everyone. Take care.
Thanks, everybody. Thanks a lot, Campbell.